Hey guys, it's Steve Lamothe, the founder at Elevate Realty Group, and we're continuing our education in 2026. And I put a short snippet a few weeks ago out about insurance issues in California and got tons of questions. So today we're going to break down what are the 3 reasons we have insurance all out of whack in Northern California. Many people have reached out to me last year and especially this year asking what the heck is going on with my insurance? It doubled or it tripled, and it is a severe issue. Now, even if you don't have fire insurance, your normal property and casualty insurance and probably your auto insurance is increasing when you go to renew. I would estimate 40 to 50%. So let's break down the top 3 reasons why this is happening, and I'll share a little cheat code on maybe how you can save some money. So the number 1 reason why costs are going up and why we have these crazy insurance issues are carriers are leaving the state, right? So this started happening really in 2019, 2020, expanded on this heavily, but insurance carriers started to leave the state because the state of California was requiring them not to raise their premiums every year, and they put some caps in place and a lot of restrictions on insurance companies. Couple that with major losses like the fire out near Chico and Paradise, and then the big fire in El Dorado County, and the big fire that went almost to Tahoe. These fires create billions of dollars of cost, along with Palisades, right? These fires create billions of dollars in costs, and that cost gets shared to everyone who lives in California. And many insurance companies are just straight up pulling out of California. Not to mention, the average price point in California is very high. So when they have losses of 100 or 1,000 homes, it's extremely expensive. Issue number 2, the state of California enacted something called the FAIR Plan. This is fire insurance that steps in place in high-risk areas because so many insurance providers weren't covering homes in high-risk areas, right? So these are people who could not get insurance, or maybe their insurance costs went to $15,000. So the state of California got in the insurance business. Now, like with government and all avenues, they have not run this plan very well. They really don't know what they're doing, and the plan is underfunded, meaning they have balances owed more than the premiums they're bringing in. So even though you can get insurance in higher risk areas, the insurance is very expensive and it's mismanaged. Number 3, there are more rate hikes coming. So between insurers leaving the state, FAIR Plan stepping in for high risk areas, and then the most important thing is in 2020, because of COVID, the state of California locked rate increases. So the insurers who were left in the state of California could not raise their premiums anymore after 2020. Now, that stayed in place from 2020 all the way until 2024, right? So imagine how high prices went on homes. Prices increased maybe 30%. The cost of building went up 30 or 40%. The cost of trucks and cars went up 30 or 40%. And now in 2024, the insurers had to reset their rates. This is why many of you are getting rate increases and you're like, wow, what the heck? My insurance doubled. Now, this all makes sense, right? You can't keep your prices the same for something when you're insuring products that have doubled in value and keep your premiums the same. This is a big deal. I want to share some quick hacks. Now, if you're in high risk insurance areas, this is Folsom, El Dorado Hills, Shingle Springs, Granite Bay, these areas, there are insurance providers that are backed by the state of California, and the name of these are like accredited or accepted insurance carriers. Now, if you want to go with one of those insurance carriers like State Farm, think State Farm, you can use the FAIR Plan, and then you use State Farm as they call it a wrap policy to be an adjacent coverage. There are next tier level down insurance carriers like Delos. If you go and do some research on this, you can get insurance in higher fire risk areas without going on the FAIR Plan at a much cheaper cost. And these insurance carriers, although they're not backed by the state of California, they're backed by multi-billion-dollar insurance underwriters, and there's really no risk they're going to go bankrupt. So this is saving 40%, 50% on fire insurance in high fire risk areas. You can also do things like lower your water coverage, like for floods, right? and install a meter at your water main that can shut off the flow of water in the event you have a leak. There are some cool tips and tricks where you can save a lot of money on insurance and hack some savings because it is very expensive. As always, reach out to us at homesbyelevate.com. I know this video was a little longer, but insurance is going to be a major issue moving forward. We are estimating 30, maybe 40% price increases over the next 2 years. It's not over yet. Reach out to us at 916-436-SELL.